Hello, everyone. Just give me 1 second, getting everything set up here. Just double checking to make sure everything works. Happy Sunday. Give me 1 second. Share window there. Make sure this is working. Yeah. All right. Full screen. All right. Are we good? All right. Are we good? All right. Are we good? Right. All right. We're set. Daryl, what's going on here today? Good morning, everybody. And yeah, this will be a fun one. So I'm going to wait 30 more seconds till 10, and then we'll get started. I'm trying to be precise with my timing here. All right. 5, 4, 3, 2, 1. All right, here we go. Welcome everybody to a Courage Pays Better Than Fear Trading live stream. I just got done running, so if I look a little sweaty, you know why. But I'm excited to talk with you guys today because, man, what a fun day that it was in the markets. And, if you're a trader out there, if you're an investor and you were watching the charts on Friday, everything was flowing along very, very smoothly until all of a sudden, in the matter of 2 candles, the narrative of extreme bullishness, we're going to the moon, just flipped on a dime. And I happened to be in an Amazon day trade at that time. And within those 2 candles, boom, stopped out. But just imagine if you didn't have a stop in place. And I have a Bitcoin chart pulled up here because the talk over the weekend has been about how many people were liquidated in their accounts because of trading off of margin, using too much leverage. And you could see this massive move that we had here. Let's just measure this out from the top of this wick to the bottom, which it got down to 107,000. It's a $15,000 move. So 12.61%. And it just goes to show how big the reaction was on Friday. And we've all seen this story before. If we go back to April, when really it started in February, when the tariff talk heated up, we saw big, massive moves to the downside that eventually dropped us 21% into bear territory. It didn't last long. If you remember, we got the 90-day tariff pause and we had a 400-point candle on the SPX, and it was just a significant period of volatility. And so this is going to shape up to be a very fun week. We have to monitor what comes out of the White House. We have to see what Trump and his team have to say about the new tariffs that are being imposed on China. If there's any backing off of it, his statements, he basically said there will be 100% tariffs first. The reason to meet with President Xi from China, but then later that evening, the meeting is still on. They're still going to meet, and there's opportunities. Things. The last thing I'll point out, and we'll get into the charts here. I'm just trying to set the context for what occurred. Is China released some statements through their, I think it was their U.S. ambassador this weekend, saying that the rare earths restrictions, and this is what Trump is upset about, and this is where these tariffs are coming into play. But China said that these rare earth restrictions that they're putting in place in terms of exports can be bypassed via an application, and that there are certain. And they also said that they're open to negotiating. They don't want a trade war, but if it has to be a trade war, they're willing to undergo it. So there's willingness on both sides to work. And the bottom line is U.S. needs China. China US. That's never going to change. And so we'll get to see how it all plays out. But anyway, just since we're here on Bitcoin, we could just take a look here. A little bit of green right now, nothing to get too excited about. Up 690 points. But you know, it faced a pretty serious drop here. And I'm going to actually move over to my better charts. You can see, if we just look here on the daily, that we came down and perfectly nearly bounced off to 200. I mean, you might as well say it's there, but that wick nearly touched. You can see that massive volume spike that came into play. Uniquely enough, too, is the day of this huge move on crypto, somebody opened a crypto wallet and opened a massive short position that I think generated $88 billion in profit. So you want to talk about insider trading? There you go. But just coming back here on Bitcoin, the closest that we got to the 200, you'd have to go back to June here in just the last couple of months. We nearly got down to it, and then there was a push higher. So let's see if this is going to serve as a support if we bounce from here, or if this is just going to be a little bit of a retest as such. Bloop, and we're going to come lower and maybe bounce off of this trend line that's established here. You must have like a megaphone pattern developing. So we'll keep an eye on that and watch it. I know I'll be, and then looking to see what happens when futures open up this evening. But let's just start with the data that we're going to get this week. Again, we have the government is still shut down, so some of this data we may not get. We do have quite a bit of Fed speakers this week, and I do believe Papa Powell here, yes, he's going to be speaking again this Thursday, October 9th at 8:30 before the market opens. So just mark that on your calendars. But let's just take a look at the data that we're going to get this week. Nothing really that I'm going to be watching or paying attention to. Again, we have lots of Fed speakers. We'll have to hear them comment on the new U.S. Chinese tariffs. Heading over to Wednesday, really not watching much over here. Again, we're going to have. Oh wait, I'm on the wrong dates, guys. Sorry, my bad. Here we go. I knew Powell was speaking this week. So Powell is speaking Tuesday. So that's going to be a little afternoon. So it looks like this one's going to be more meaty. The talk that he gave last week was just a pre-recorded conversation ahead of regional banks discussion. I did a live stream of it, just impromptu, and then ended up being a nothing burger. A couple more Fed speakers. Again, not a lot of data. We are going to get New York Empire State Manufacturing. I don't think that's going to be impacted by the government shutdown. More Fed speakers on Thursday. So this is the week we're supposed to get CPI and PPI, and they moved the CPI report to the following week, which was interesting. That's a change. But we are going to get the PPI report. You can see right here, PPI month over month. We're supposed to get that on Thursday. Let's see if the government shutdown holds that back. We're supposed to get jobless claims. Hopefully we get that, because that'll give us some insight into the health of the labor market. Retail sales, we'll get some insight into the health of the consumer. So quite a bit of data for Thursday. And again, more Fed speakers. And then Friday, building permits, housing starts. So we'll get up here some insight into the housing market. So a decent amount of data on Thursday and Friday. But again, with this government shutdown, we don't know how much of that is going to be held back until all of this is resolved. And that's one thing to think about, too, is once this government shutdown is over, it's going to be a glut of data that's going to be released. So that is going to set up for some major volatility. So just keep that in mind, too, for when that happens. And who knows how long that the shutdown is going to last. Earnings that are going to kick off this week. The big banks that are going to start reporting on Tuesday. And really what I'm waiting for is the week after, because that's when your big tech will start reporting, your Mag 7s. On the 21st, Netflix is going to report. The day after, Tesla reports. And then the week after that is when you boys, your Apples, Amazons, Meta. So it's going to be interesting to see what is going to transpire this week. You have the banks reporting. We're going to get to hear their CEOs comment not only on their financials, their earnings, profits, past their guidance for future quarters, but I'm sure they're also going to be asked about the new statement from Trump on Chinese tariffs. So definitely going to be an important week for the markets. And I don't know about you guys, but I love earnings season. I have a strategy that I use with far out of the money calls that's very, very low risk, but can be very, very high reward. And I'll definitely be implementing that, and we'll see how that plays out. But let's go ahead and jump into the broader markets here. I will asking you guys for charts that you want to look at, and just taking a look at the SPX here. I actually put together this chart over here because I wanted to go and look on the weekly and just give some of what a true drop looks like. Everybody is panicking, freaking out because we had a 2.71% DPX on Friday, and that's nothing. That is nothing, right? If you just go back and look at the tariff drop that we had back from February into April, that was 21%, right? That was a true decline. This is nothing. And what happens is when you have these big, massive bull runs and you have the slightest bit of weakness, is everybody freaks out and says it's the end of the world. But just look how much further we could come down. And if you really want to see where there's trouble, it's when you start your longer term moving averages. And we're looking here at a weekly chart. But what I wanted to point out is really when you get down to that 200 or near that 200 weekly, then you have some problems. And I put some stats together here going back to 2008 just to see, how often we've hit that 200 simple moving average on the weekly. Or actually, this is the 2001. But since 2001, we've had only 6 touches of the 200 weekly SMA. All right, so that's 6 times. It happened in 01, 08, 11, 18, 20, and 22. And we nearly got close this past April. Right. So if you average that out, that's a touch. And what I mean by touch is the price action comes down and hits that 200 or goes below it. It happens every 4.2 years. Typically, if it goes below that, the average drop below the 200 on the weekly, and that's significant bear territory. Go take a look at 2008, the Great Recession. It'll go about 22% below that. Over the past 6 years, we have touched that 200 twice, right? Once in 2020, once here in 2022, and we've come close multiple times. And so just using that, if we use that as a marker, okay, well, when's the next time we're going to hit the 200 or come below it, using the number of days, because I figured that out as well. We'd have to look out until November of 2026 for a true meaningful drop. And as I'm starting to plan out and look ahead to 2026 and my concepts for where we're going to head, I do think that there are risks on the table for a short-term bear market in 2026. And just with this little analysis that I did, looking at October into November of next year, we could really see some weakness. And remember, in October, typically that's where bear markets bottom. But if we get weakness, let's say starting, if we get the sell in May, go away concept this coming year, and we sell down into October, since we know that October is a bear killer, typically where bear markets bottom, maybe this is where we can see some type of a bounce. But I'm showing this to you to put this into context, that this drop that we had on Friday is nothing. It's nothing. We can go way lower. A true correction is 10 to 20% off of all-time highs, right? So this is nothing. And bear territory is anything down below 20%. And the way you have to look at it is, and you could just zoom out here on the SPX chart. those little dips, what always happens after those dips, and you can go back from the inception of the stock market, it just goes up. If you're able to ride out those periods of volatility and buy in areas of value, you'll make money, right? So I just wanted to frame this that we could go much lower. As scary as Friday felt to people because we've been so bullish, it's really not anything at all. The comments here. 2023 gainer, thumbs up. Thank you, sir. As AI tech leads, yes, I mean, there's no doubt that that according to Jensen Wang and the big players in the AI, scratching the surface of what's possible with AI, more for entertainment media purposes. We haven't seen the true impact from a productivity standpoint on the workforce. It's going to cause loss of jobs, but it's also going to increase productivity for the world. So we're going to see a boom from that. River Braid says probably no data this week. Agree. A red one potentially. December 2024. I think. Yeah, we'll see. So anyway, let's get here into the charts. I know I've given some perspective on things, but we had about a 212.18 point drop here on the SPX. That is a massive bearish engulfing candle. Nearly came down here to the 50. Post market, we saw that a lot of the indices continued to drop until Trump said that the meeting with Xi is still on, and then we saw a little bit of recovery. And in terms of big moves down like this in one candle, back to the tariff drops, right? This candle here, April 4th, 216 points. This move, 2 points, followed by that banger here. This was the pause. But I wanted to point these candles out because the market is going to be highly sensitive to any type of news events tomorrow. So if Trump announces anything, or be ready with your trades, make sure you're protected with the stop, because with those big wicked moves, you can get stopped out in a few candles, and you don't want to get. But anyway, just to show you guys down, in order to get a 5% pullback, we're looking at 65.29, which we still have a little further to go, and that would be below that 50 simple. Got a little bit of support there on the VRVP. If we get through 5%, I think more than likely we'll come down here and test this 100. I think that would be a really nice spot to see the dip buyers come in. But if we want to get a full-fledged 10% correction, we'd have to come down here to 60.86. And that's where you'd want to see buyers. If we get below that 200, that would not be a good thing. And you can see here too, we're starting to head down on the RSI, getting near oversold territory. Be due for a bounce, but just still keep in mind we're above that 50, and the reaction I think was stronger than what the move. Sure, it was a big move, but we've seen this story before. Uptick in bear volume. But we got to be calm and poised in these types of situations. All right, I'm just gonna get a drink of my coffee here. All right, continue on. Let's take a look at the Qs. And you're going to see the broader markets are going to look very similar here. Again, big, massive bearish engulfing candle. You can see where this buying came in here on the 25th of September, and also on the 17th of September. That's where it found a little bit of support. I wouldn't call it much. But more than likely, we're going to get a test of the 50 here before we get a bounce. Again, huge volume, but again, much needed because these markets were so overextended. IWM, same thing, new all-time high, big bearish engulfing candle, nearly came down to the 50. Again, that should or could be the bouncing area. And again, a lot of these broader market charts are just going to look the same. And when I pull up the Dow Jones, did poke its head below the 50, and it does have some thin volume here on the VRVP down to 450.33. So potentially we could see this one come lower faster. So keep an eye on this one. But it's pretty evident the markets look like they want to come lower. That's a bearish engulfing candle. But what I want and I wanted to pull this back up. This is the flash crash of August 2024. Is do we get something like this tomorrow? So the flash crash was back in August of 2024, where the unemployment rate picked up and unsuspectingly caught some people off guard. And you got this massive move to the downside. And this was the Friday when the market closed. And then what happened is pre-market on Monday, this thing just kept, it gapped down and kept dropping and dropping and dropping. But what happened from there is you had bulls step in and start pushing this thing up, and it made for some great day trade moves here. And then you could see it climb back up and hit all-time highs. So I'm wondering if this is a model to follow. This is what I'm going to be watching. So let's say tonight when futures open up at 6, if we have a move down, I'm going to be watching if it drops, if we could potentially get a push higher tomorrow. So that's the model that I'm looking for heading into Monday. All right. So just that's an overview of the broader markets. The 10-year, let me pull this up here. So the 10-year broke down below this trend line, went up, tested the 50, got rejected, came down. And now we're just we've just been moving sideways a bit. And the VIX, finally, we get a VIX spike. Finally, we haven't had a VIX spike. We'd have to go back to August 1st, right? But we are above all of those moving averages, so it can move pretty quickly. Here was the VIX spike back in April. This is all the tariff craziness. You could see that's a VIX spike right there. We're nowhere near that, but if the rhetoric intensifies, we're heading up there, and we know that when the VIX is high, that's going to put pressure on markets. But the VIX needed to pop like this. Again, the market needs a dip. It needs a correction. So here it is. And everybody says that they want to dip until it gets here. And then they're like, oh my gosh, I'm afraid I'm not buying right now. Right. But you got to look for good opportunities. And there are lots of them out there. So if you guys want to go ahead and throw in any tickers you want me to look at here in the chat, I'll cover those for you guys. And I'm just going to look at a few here myself. And again, they're all going to look very similar because they're just massive bearish engulfing candles here across the board. All right, so let's just start here. Here's Apple. So nicely enough, Apple dropped and filled this gap from September 19th. So that's interesting to see because typically once a gap is filled, you get some buyers who step in, a little bit of a bounce. But notice that we have this 50-day simple moving average right here that aligns with this volume node. So I'm looking for a path to come down and test that 50. That's where I would be looking for setting up some day trades, potentially a swing trade because we have thin volume above. So it could move rather quickly. We did come down on the RSI quite a bit, but that gap on Apple was filled. Amazon. I like Amazon right now. I really do because it's been a laggard and it hit its all-time high back in February while all the other Mag 7 have been running and pushing harder. This one's just kind of been chilling out. And we look like we were going to get a move here on Thursday. And we closed above that 50-day simple moving average. And even Friday, we started to push higher and I was feeling pretty good about my day trade. But then we got a social media post and bang, big bearish engulfing. But notice how we have the 200 sitting right here. And if you just look over to the left, there's this cluster of candles when it dropped down below its 50 before. Didn't touch the 200. We're really just back right into that area. So it seems like there are buyers who are interested here, but they've really got to keep this thing propped up because we could see thin volume below on the VRVP. And if it does break below that 200, it could fall rather quickly. Now, it does have earnings coming up here on the 23rd of October. But I do like Amazon. And really, here's the thing. And this is perspective, right? This looks like a very scary candle, but we were just at this price on Monday of last week. Right. So perspective here, perspective, the sky is not falling. So Justin says BTC. So we already did look at Bitcoin, but we'll take one more look at it. So, you know, again, we had this big $15,000 candle, huge volume spike here on Bitcoin. What I would watch here for now is a retest of the 50 and then see it roll over. And then let's see if we can bounce off of the bottom of this megaphone pattern here, and then start to push back up to the top of it. But I think we'll probably get a little bit of a short-term bounce here with crypto. But again, I think that 50 is going to be a rejection point. And the question that we have to ask here is how much fear is out there in the crypto markets right now based on what happened on Friday, and does it intensify, and do you get contagion where everybody's like, oh my gosh, I'm out, I'm selling all my crypto, which I hope happens because I'm just going to keep buying. But I think we probably got a little bit lower to go. Again, look for a retest into that 50 before taking a shot on it. And then Marathon Digital Holdings. I hate this stock. I really do. I don't know how anybody trades it. Not a fan. But you can just see here, we are making higher lows. And it did have a nice move going before Friday. But you can see here, we're coming into an area of resistance that was established in July, or actually you got to go back to January, where it just hasn't been able to break through that. It did make a recent high of 30.28 last November. That was after all the election hype. But you can see this area, if you really want to move on Marathon, you got to break this 21.49 area and get a nice strong close above it, and then you could really push. But you do have lots of bears sitting up in that area. You have lots of profit takers, so that's why it's not pushing out of there. So looks like this one's going to come down and at least retest the 50, and then you'll get a climb again. But you're going to need Bitcoin to get moving if that's going to happen. Daryl says double or triple bottom on Bitcoin. Let me come back to it. Yeah, it does look, you could make that argument here. You know, you are kind of, or you could even say inverted head and shoulders, right? But we kind of broke down through that. But unless you're just making a second shoulder here, you're just establishing some support potentially. The only thing that I would say is just I'm looking at this in terms of where we are, and if we didn't just hit this all-time high last Monday, I'd be more apt to call it a double bottom. I would want to see a bit more of a retest and us come lower and then form a bottom near just a lower price point. But you're accurate. That is a double bottom pattern. I just don't like where it's situated because it's too close to interim highs, all-time highs. But I definitely see what you're talking about. I even saw over the weekend some people on X talking about how you have a potential triple top here too. So, you know, I think we just need to see this price action play out more before we trade a pattern. I think we can come lower. If we do come lower and then make a bottom, or even if we can come down off of this, the bottom of this megaphone pattern and create a double bottom, that would be a really nice opportunity there. All right, let's take a look at HIMS. HIMS. Again, there's going to be another big bearish engulfing. But this one, I mean, this one hung in there. It stayed above its 100, stayed above its 50. And again, we're just back to the prices that this thing was on Monday. So, I mean, I don't think that's that crazy of a move. Sure, it's $4.30, 7.38%. But again, perspective. I mean, this one is just really, to me, if I look at HIMS, and let me just mark out its all-time high from February, this one has room, and it hasn't made a new all-time high. But if you just look at this, it just looks like it's stuck in this range for right now, and it's just kind of building pressure. And notice if you look at the VRVP, it's pretty thin volume inside there where it's bouncing in between these two thick volume nodes. So if you get a catalyst either way to the upside, something positive about a new partnership or something from HIMS, you're going to take out that new all-time high. If you get something negative, some type of restriction against them and their business, then you're going to take out the bottom of that range and it's going to head lower. But pressure is building. So you want to watch this one for a move to either side because it can happen. And this is a fun one to day trade. I really enjoy day trading HIMs because the moves are pretty strong. And again, it's been range bound here, but I think it's setting up for a bigger type of a move. So student ASIM says, is IBIT worth picking up rather than buying Bitcoin? From my perspective, I prefer just owning. I spelled that wrong. I prefer owning Bitcoin over any type of a ETF or a fund, because I want to own the original asset. That's just me. There's more control that institutions or the owners of the funds have over the product. I probably don't have it on. Give me 1 second. So, and from my perspective, I would say that I'm not seeing this on here. Why am I not finding it? There it is. I would say owning Bitcoin is better than owning the ETF. That's just me. Again, not financial advice. That's my perspective. That's how I approach it. But again, it's going to be similar. If we just put two charts up here, let me put Bitcoin. They're going to look similar. Obviously, we're not open on IBIT, on the weekends, but that's the other thing too, in terms of liquidity and access. With Bitcoin, it's 24/7, 365 days a year. Here, if you have, let's say, a massive move on a Saturday or Sunday or a holiday, well, this is locked until the market opens back up. Bitcoin's not. It's 24/7. So let's say you get some crazy massive pump that happens one weekend where you just get an insane move. Well, you're going to be able to access your Bitcoin via your broker, but you're not going to be able to access your IBIT. So that's just my take, and that's what I would recommend. Daryl, the $1 million question: do we go lower or higher by the end of next week? Because I have an answer for you. Now, this is just my perspective on what I think is going to happen. But let me come over here to the SPX. So here's the question that we have to ask ourselves: has anything structurally, fundamentally changed about this market? Has anything happened to the growth prospects of artificial intelligence and the impact that it's going to have on productivity, the workforce, the earnings and profits of companies, just the overall general benefit of humanity? Has that changed? No. Has liquidity dried up coming into the markets? Are there going to be less funds available to come into the market? No. Is the Fed done easing policy? No, the Fed's just getting started with easing policy. Are companies going to start taking hits in their earnings reports? No. What we have right now is a short-term negative catalyst, and it's geopolitical. And again, we've seen this story before. A lot of the tariff noise has been priced into the market, but you could see how the market responded after the drop lower. So just using that as a past guide, Friday's tariff announcement was an excuse, in my opinion, to initiate a market dip or correction. We have not had a 5% pullback since April. That's unhealthy. And if this market's going to continue to climb higher, which I think it will, I still think we hit 7,000, maybe even higher on the SPX by the end of December. It's got to pull back. It has to pull back. It has to come lower. So with that said, I think that there is some manipulation and fabrication of all of this, and the market's manipulated. We know that. It's manipulated by the big money for what they want to do with the system. And that's not a conspiracy theory. That's just the reality. And so I think a pullback was needed, a correction was needed. This is the start of it. Now, what we have to watch is, do we start to get negative news after negative news after negative news after negative news? And do we start just getting a rolling ball of momentum that continues to apply pressure and push this down? So what do I mean by that? Does Trump elevate his rhetoric against China and about tariffs? Do we, when data starts getting released, is it negative? Are we seeing inflation tick up? Are we seeing the job market continue to crumble? Are we seeing manufacturing and services data come out being weak? And does that evolve into a conversation about a recession? Do we start seeing companies begin reporting poor earnings, missing targets, and giving poor forecasts? If we start seeing all that and we start to see a snowball, then we're looking for something that's going to structurally change the market. But if anything, this is just needed. It's a needed pullback, and more than likely we'll get a little bit of follow through, and it might come pre-market. And again, look for that August 2024 flash crash model where things dumped pre-market into the market open, and then buyers just flooded right back in, because everybody's been waiting for a pullback. But what I would say is this is not enough, right? If we measure this out, it is 3.1%. It's not enough. So let's hope for a 5%, a 7%, 8%, even a 10% pullback, because at that point, then I think you'll see the big money step in. So do I see the market being red next week? I think it is red through Wednesday, Thursday, and then I think we have OpEx on Friday. I think on Friday you'll see a green day. So I think you're going to have the weakness that comes into the market the first few days. You'll have maybe a couple little bounces there, but I do think you'll see a rebound as the rhetoric starts to soften a bit, as we get some maybe some negotiations, discussions between the U.S. and China. And here's the thing, you guys know this too, and let me reference this candle. This candle right here, right here. Everybody was short on the markets, and they announced the 90-day tariff pause, and this thing ripped 527 points, right? So short this market at your own peril, because these are all news-related, news-driven, temporary sentiment candles, right? All it takes is one Trump tweet that says now is a great time to buy, or spoke to President Xi on the phone, and we made solid progress, and you're going to see a huge move. So if you are going to short or lean bearish heading into Monday, I wouldn't do that with any swing trades. I wouldn't have any short swings. I'd be day trades, have tight stops, protect yourself, because you don't want to get wrecked by a news candle. So Daryl, long story short, I know I went long-winded there, but I get fired up talking about this stuff. I think you're going to see weakness to start the week, and then you probably get some bit of a resolution, and then Friday we get a little bit of a green. I don't think it'll be just a massive drops down, because that would be a sign of bigger problems. I think it'll be more like a stair step. But I think you'll see some buying start to come in on Friday as things start to get resolved. I know this isn't advice, but if you have 100K, what is the best way to stretch your cash to make the best investment? Knowing that well, I would say this, that this is not the time to buy yet. We are nowhere near a point to deploy large amounts of capital into this market, because we're still way up here near all-time highs. You want to wait to a meaningful pullback to the 100, the 200, or even wait for the next bear market, or something like this that happened off that tariff weakness. Or if you come back to, this is the 2022 bear market, you want to wait to deploy large chunks of capital into weakness. And it's counterintuitive because this is where people panic and sell and get out of the markets. But as Warren Buffett says, and he's the GOAT, be fearful when others are greedy, greedy when others are fearful. So if you have capital for an investment, you want to wait. Right now is not the time to buy. Wait for a pullback dip. We might be getting it, but you don't want to buy at these elevated levels. I guess watch Truth Social daily and put note. Yeah, I would. Yeah, I'd follow X. So I just, and the funny thing was, I was talking to my wife on Friday, and I had my Amazon chart pulled up. I'm watching my day trade. We were talking about something, and I was just like, whoa, what? Because it was like bang. And I was like, oh, that sucks. And then the second candle came in. It was like, well, stopped out. And it's been a pretty good October so far, but man, that was fun. But yeah, definitely want to monitor the social media this week for sure. Yeah, Truth Social. It's a Trump social media app. I don't have an account for that. Like I said, I just follow X. I mean, if it gets posted on Truth Social, what's coming on X in a heartbeat. Although I will say, man, you can go down a rabbit hole on X. So you gotta be careful. I gotta like shut that off because you want to talk about doomsdayers. Jeez, the 1929 crash. And here's the thing. Nobody knows exactly what's going to happen or where we're going, and that's why you got to protect yourself. That's why when you run up into all-time highs, you got to trim as your positions grow. You can't just think it's going to go forever. You got to lock in gains. You got to protect yourself. In trading and investing, protecting your capital is everything. You can't be a degenerate gambler of the markets because you will lose everything. That's just dumb. It is dumb. Lock in profits, lock in gains, protect yourselves. That's most important. All right, guys. Well, it was fun talking. I know I went into just kind of a lot of bigger picture stuff here today with some of the charts, but these were a lot of things I was thinking about that I wanted to share with you guys. I appreciate you joining me for the live stream. It really does mean a lot. I'm passionate about the market, so to be able to do this, it's fun because if not, I'm just doing it myself because all I do is trade and study markets. So I really appreciate you being here. If you haven't subscribed to the channel, please do so. That does mean a lot to me. I'm really trying to grow this thing organically in the right way over time. So I'm an amateur. I'm learning how to do this. I know I had a couple people say, you need to work on your editing. Trust me, I'm working on it. But I appreciate you being here. Any comments, likes, or shares that you do with the videos, it really does mean a lot to me. If you comment on the videos or if you need help with anything related to trading or if you have questions, you can email me at couragepaysbetter@gmail.com. I'm more than happy to help you guys out. And just be safe out there in the markets, guys. Don't be doing anything crazy. Protect yourself, lock in gains, and it should be a fun one. And I'll have another live stream next Sunday. If you want to join me, we'll do it the same time. And I appreciate you guys. Let me see here. Sorry, it's okay, Jackie. The video will be up there. Thanks, Don. I appreciate that. Yeah, my YouTube address. Let me throw that here. I just got to grab it. Let me stop the share here, and I'll throw it in the YouTube. Should know it off the top of my head, but I don't. Here, I'll throw this in here for you guys if you don't have it. Yep, and then here's my Courage Pays Better at Gmail. All right, guys. Have a great day. I appreciate you. Thank you.